Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Bill, we've had a bit of, well, I say we, I mean I'm taking the credit, but you've had a bit of success with UK coal, which has done pretty well over the last week or two since we mentioned it last on here. Talk us through what's happened. Yes, I think it was. Talk us through what's happened and talk us through why this is interesting.
It's gone up 50%. You know, we looked at sort of give me the voice piece to the world, Giles. It's a fantastic opportunity for me to sort of think ideas aloud, really. And we looked at the shares which are deviating from their 200-day moving average and those that weren't. And the extreme examples we took UK coal as a random dip to say, well, this one is 83% below its 200-day moving average. Yeah. Is there would you buy this one at 50 odd pence? Or would you buy something like, what was it, Jardine Lloyd? Jardine Lloyd, due respect, has held its ground. It's done very well, still 5 or 6% above the 200-day. It's 200-day. But the UK coal has surged. It's up nearly 50%, 60% up. It's extraordinary. It's 84 pence now at the moment, which is, 60. It's a super run. What I've done from that is to extend the thought is, what made that become a buy? What were the ingredients for that to become a buy in order to piece together a system to say of reliability rather than just do their shares have to be down a certain amount, and what else does have to be in the mix to make that more concrete?
And what did you come up with?
Well, I've got the UK coal chart in front of us now to look at that. So what I've done here is combined the relative strength against the underlying, the 350. So the underlying it's in the 350, it's in the 250, so it's in the 350, and I've drawn a benchmark of 40%. So it has to be underperforming the 350 by 40% even to want to look at.
Right.
And this is what UK coal is in that zone.
Okay. And that's one of the criteria. What's next?
Well, that's depicted on the second window above the bottom of the chart there. The top of the chart is the relative strength, which is indicated the window beneath the top window. So there's the second window from the top. It shows you the relative strength on a very short period of time at the low end and the high end. So when it crosses the lower threshold, as it did, the vertical line on the right-hand side coincided with the buy signal we had on that one on the 21st of November. So that's that vertical line. That's why that's come in there, and the line, as you follow the line down from the top, the second window from the top shows you that it is crossing the lower thresholds above 10. So that's creeping in there. The line on the right hand to the left hand of that is the red line showing the last sell signal. The last sell signal didn't apply because the buy signal was above the threshold of 40%. So the only buy signal we've had on this one was on that particular date. Right. And what I've done is extend the philosophy through to other shares.
I see. Okay. Well, let's have a look at some of those other shares. Let's start with. I think you've got a house builder in there, haven't you?
Taylor what's it?
Taylor what's it? That's the one. Yes. So let's have a look at Taylor what's it, and because these house builders have been literally decimated. This is Taylor Woodrow. Yeah. Woodrow. And are you seeing the similar performance here that you spotted on UK coal?
I am actually, yeah. I mean, it might be the 26th of November. It might have been just happened to be a coincidental day, but this was when it touched 5 pence. And the next day, by the next day of signal, and that's the vertical line showing the next day in, you'd have bought at 7, and since then it's been up to 12.
Right.
I mean, that's a very short term now. You could say, well, what happened before that? It's all very well then. Okay, let's go further left and see what happened there, because it's well below the 40% threshold, as seen by the second window above the bottom. The blue vertical line suggests that we would have gone in at 13, and with a red line at the top coming down, the red vertical line suggests where you sell. When it goes above 90 and tops down, comes down to the top, that's a sell point. So when it goes above 90, you're instantly given a warning that if you're making a reasonable turn or you want to get out, you can get out certainly much quicker than waiting for the actual turnover point, because these things are very volatile. So you can actually get 18 pence out of that. And going back further, so okay, what about going back further on this and going back further left on the chart, sorry, yeah, we're looking at a signal coming in July near 30. 9th of July came in at near 30 pence, and although I haven't put the vertical line for the sell point to come in there, that was near 50. coming through there. And 2 prior points to that, on the further left, is we have buy signals there, which I suppose hadn't worked or didn't work or whatever, for whatever reason they didn't. Not every system's going to work. It didn't come through. Perhaps the first one on the left-hand side, the share price didn't go up, so you wouldn't have bought it. The second one, you'd have probably broken even on coming out at the price you paid for it. But even so, the returns short term I've seen on the system haven't been bad.
Would you be nervous? I mean, one of the reasons Taylor Woodrow's fallen so heavily is that, I suppose it's almost in breach of its banking covenants, bankruptcy staring it in the face. Are you not nervous trading a company like this when you could wake up one morning to find that the shares have been suspended?
Could be, but you need to put money management in place, Charles. All these smaller shares, and if what was going on at UK Coal, and multiples of 1, and I had a profit warning at £2.80 or recently, and you think, well, what's going on? And you see something down now for a while, and you think, what's wrong with it? What's wrong with it? And then you start looking for a negative scenario as to why that share's down, rather than actually looking for a technical point of saying when that share starts kicking up through the low levels, it will give you a buy signal.
Right.
So you're actually jaundiced by your own curiosity, in a sense, because you don't know quite what you're seeing.
No.
You create your own reality on that point.
That makes a lot of sense. Okay, let's move on to the next chart that you want to look at. We've got 2 more.
Yeah.
One is Unite Group.
Mm-hmm. Unite Group, yeah.
Talk us through what's going on the right-hand side of this chart, then.
On the right-hand side of this chart, we don't see anything more than one vertical line, because that's the only time we've had a buy signal, as indicated by the blue blip at the top, when there's been a horizontal line on the second window from the bottom below 40. So it's minus 40, and that's the only buy signal we've had. That Unite Group you'd have bought on the 24th of November at 73, and it's now kicking around 110. So that's the only time that one's come in. To buy. All the rest of them on the left-hand side are irrelevant because the threshold bar of minus 40% against the underlying has not been applicable to this one. So it's only applied once.
So, but a useful trade again.
Stunning. I mean, this is building up something here. It needs another ingredient because there are a lot of other shares which are down and out there, which haven't been going, which haven't been performing. And it's a case of what makes the final ingredient, that short-term ingredient, make it more exciting. And I think it's something to do with shorter-term relative strength. We need to see. I think that you see the underlying shares suddenly start moving with a bit more of the market movement. Although this one hasn't. That's what I'd be looking for. But it's very encouraging so far.
Okay, and finally Cookson. I think they're engineers, aren't they?
Yes, Cookson have been blind with profit warnings and adverse comments here and there. But this one here again is below the 40% threshold, and there's been no signal at all, apart from this one great signal on the 24th of November we had at 74 pence, and that's rolling over 100 pence now, 110 now. So this one is going great guns. Again, oversold on the threshold, oversold against the market, oversold against itself, which is again the top line, top two windows indicate. When it's oversold against itself, you get a blue blip coming up, and also you can see it again on the relative strength against itself. The RSI 2 I'm using here. When that goes below 10 and crosses up, then that gives the buy signal short-term buy. And it gives it a trading opportunity, especially if the market's if the share's trading below 40% against the relative strength of the market.
So is this a trader's market now, Bill? I mean, I haven't heard you say for a while, buy these shares now, put them in the bottom drawer, and let's see what they're doing next year.
Well, there are 1 or 2 shares that I have been doing that with, and there are 1 or 2 shares, but they're tucked away, and it's a case of what else is there to do.
Yeah.
And then if one said, well, you can easily say, take the idea, I can't make money. I know. If you suddenly believe you can't make money, you won't make it. You say, look, I lost it, therefore I won't do it. And it's very easy to actually your beliefs to become fulfilled. As soon as you have a belief that you can't make money, you'll find something else quite easily to say, look, I can't. I told you I could make money. That's what you're saying to yourself. Therefore, I won't make it. I won't go to the market. And this is what a lot of individuals are doing. They capture bad news on the television. They see a little loss in the portfolio somewhere or whatever, and they say, I can't make money.
Yeah.
Or we can't make money, therefore I won't do anything. And it's very, very easy to become self-fulfilled. And with that, your capacity for making money short-term is dwindled. And so because you don't see it. because your belief structure is one that you can't make money. If you actually say, well, okay, there are possibilities here with money management in place. Yes, we're dealing with very risky shares here and situations which may not come back, as you said earlier, they may be suspended or may go wrong. That's quite possible. But if you're using money management techniques and short-term trading situations like the ones we looked at here, with tight stops, I think there's every reason to make some money if you've got the discipline behind you.
Bill, thank you very much for that, and well done on your insight so far, and good luck in the next 7 days until we chat again.
Thanks, Charles.
Chart of the Week with Redmayne Bentley.